So how do CEOs feel about the economy? Still pessimistic, according to the latest survey from the Business Roundtable, an association of CEOs of leading corporations. The survey found 49% of chief executives surveyed expect to continue cutting jobs until next quarter. For more on the survey results, a first-time Bloomberg interview. John Castellani, president of the Business Roundtable, joins us now from Washington. John, thanks. Good to talk to you again. And tell us a little bit more. What are we seeing in this survey?
Well, more importantly is what the CEOs are seeing, and they're still seeing the strains of the international economic slowdown. Now, if there's any good news in it, while the conditions are still pretty negative, you're beginning to see some stabilization. We've seen the plans for employment decreases, as you just mentioned, improve slightly from 67% of our member companies saying they were going to decrease employment last quarter to 46% this quarter. See the same things in capital spending and in sales. So it is still a negative picture, but it's not one that's in the kind of free fall that we were seeing the last 2 quarters.
And one of the questions that the survey asked was about employment. How do you expect your company's U.S. employment to change in the next 6 months? What were the results there?
Well, 6% of our companies said that they were going to increase employment. 45% did not anticipate any change in their employment level, and 49% said they were going to decrease their employment levels. Still not very good numbers, but better than what we saw last quarter.
Okay, now you were telling us that there is some good news in this report. What were you getting?
Well, the good news, if there is any, is, again, while things are still very tough in the economy, it's not in a free fall. We're not seeing the kind of drops that we've seen, for example, in our diffusion index, which went from the high 70s in the third quarter to the teens in the fourth quarter to a -5 in the first quarter. We're back up to 18.5. Now, remember, anything below 50 is still contraction. Above 50 is expansion. So we're off the bottom, but we're still not seeing anything that looks like robust growth or any kind of growth in the next 6 months.
But it's one of those things. We've been hearing the phrase here on Bloomberg a lot. We've been having guests on that things are bad, but they're not as bad as they were, say, a quarter ago.
Right. Not getting worse. We're now expecting, our CEOs are expecting that U.S. GDP will decline by 2.1% for the whole year. That's down a little bit, but it's pretty consistent with the numbers we've seen so far. So I think it's kind of a leveling off on the bottom. Things aren't getting worse, but still no signs of recovery at this point.
Are the CEOs optimistic that at least between now and the end of the year they can start to beef their workforce up again? Are we going to see more hiring? Is that the sense you got?
We don't see those numbers yet, no. In fact, more are planning to decrease than increase. If there is any positive news, it is that a bigger number are holding their workforces at about the same.
But that jobs growth indication, that will be the engine that jumpstarts this economy, getting people back to work.
That's right, and it's a combination of consumer confidence. It's about what you were talking about, the very important housing sector. It's more than 1/5 of the U.S. economy. That needs to recover. We need to see consumer demand and consumers back in the market and more confident. When that happens, then you'll start to see the capital investment, the employment numbers, and obviously the sales numbers.
Did the CEOs give any indication on what they might think of policies now in Washington that are supposed to jumpstart this economy?
Well, we are about policy. That's what the Business Roundtable looks at, those policies that promote economic growth and job creation. We did support much of what was in the stimulus package, particularly the transformational investments in our infrastructure. We think that's good for the long-term productivity of the country. And we haven't seen the results of that yet. I think it's probably, they believe it's too early. But in the long term, what's going to bring this economy back is, of course, consumer confidence and consumer demand. And that's what we need to see. That's what our members need to see. If they're going to start hiring, they're going to start investing.
John Castellani, president of the Business Roundtable, joining us from Washington. John, thanks.